line with us is our old friend, Professor Richard Wolff, the economist, co-founder of democracyatwork.info, author of numerous books. His most recent, which is also now available as an ebook, The Sickness is the System: When Capitalism Fails to Save Us from Pandemics or Itself. Democracyatwork.info, RD Wolff with 2Fs.com, his websites. You can tweet him at Prof Wolff, PROFWOLFF. Professor Wolff, welcome back. I spent the first hour ranting about the importance of manufacturing as a way of creating wealth and pointing out that basically moving money around generally does not create wealth. It just, it's just moving money around, it's transferring it from one class to another. I'm wondering if you could define what financialization is. There's a lot of talk about how the American economy, as we've deindustrialized over the past 40 years of this neoliberal free trade policy, as manufacturing has gone down, financialization has gone up. What does that mean?
Well, basically, the reality is that the financial sector, the part of our economy that, as you rightly put it, moves money around, has now successfully inserted itself literally into every pore of the economy that we live in. Governments cannot do anything anymore without turning to the bankers, the insurance companies, and the others from whom they must borrow trillions of dollars in order to function, even in a most basic way. Corporations, which used to be business entities that bought inputs, hired workers, and produced outputs, now have to spend huge amounts of time, energy, percentages of their personnel dealing with moving money around. Corporations, for example, are in debt on a scale we've never seen in the history of the United States, or indeed of any capitalism. Every transaction corporations make has to be undertaken with an eye to the banker. Can they borrow to cover this transaction? Will they be able to get enough cash flow to service the debts that they've accumulated? And finally, households. This is in some ways the most remarkable thing of the last 30 to 40 years. That people who used to earn money working would then go out and spend the money in the grocery store or the department store or the hardware store. Now they're half of the time borrowing the money. Even if they go into a little corner store to get a bottled water, they will use a credit card, for example, which is a loan. It's the way it works is that the bank literally lends you the money to buy that bottle of water, but instead of giving you the money to hand over to the merchant, the bank directly credits the merchant with the money and debits your account. It means that the bank is in your face, in your business, literally all day, every day. And the result is that the bankers, having become the big middlemen, we used to call them, are taking a cut out of everything. Every transaction gives the financial folks a commission, an interest rate, a share, a say in what's going on, and they used it to become the big growth sector. So all the people who don't have jobs in manufacturing, if they're lucky, get a job working somewhere in the insurance business, which is a kind of financial business. It simply gives us some promise of money in exchange for our paying them premiums. It's just a money-moving operation. And so we now have a capitalism in which everything is mediated by debt. Everything is interspersed with a debt someone has to someone else. And here's one important consequence for people to take seriously. We're in a kind of new world. If suddenly, for example, over the last 18 months, we have a pandemic which our system can't handle, and that's what we had, suddenly large numbers of people had no job, businesses couldn't function, and that would be bad enough. But that meant all these people and all these businesses could not service their debts. They couldn't pay the interest. They couldn't pay back the principal that they owned. And that put all kinds of institutions not immediately affected by the pandemic into a terrible situation because this network of debt links everybody to everybody else, and so it makes our system much more vulnerable to instability than it already was.
So how did we get into this? And assuming that it's not a good thing for our economy, how do we get out of it?
Well, the way we got into it is the way a capitalist economy gets into anything. Somebody somewhere has a profit motive. As we know, the dominant rule of our business is you set up a business, you get into a business, you expand the business if and so far as it's profitable. So I'll give you one example. Banks used to be mostly about lending money to businesses. Then one of them said, wait a minute, maybe we can figure out a way to make money not only by lending to businesses, but let's see if we can lend to the average man and woman, adult in this country. And that was a decision. Before the 1970s, there wasn't much in the way of consumer lending other than for the mortgage for your home. And before the 1930s, we didn't have much of that either. But after the 70s, we really went to town, led by institutions like Citibank and Bank of America, Wells Fargo, and so on, to hook the average person into debt, into financialization. And this was done by making the automobile something you could afford with a loan that you had to pay off, by giving you a credit card. Before the 70s, only a few business people had that American Express card. But afterwards, the average American has got a wallet full of these credit cards. Every one of them is linking that person to a bank and therefore to the financialization. And then the biggest one of all of the last 30 years was hooking an entire generation of college students, so they are now carriers of debt, worried sick that they won't be able to earn the money to pay it back, to keep their credit rating. The credit rating holds us all hostage. We are all working for the financial sector directly or indirectly. That's a process of profit-driven banking that led the way in doing all of that. And I'm afraid that the only answer to your question, how do we get out of it, is this is now so core a part of our economic system that nothing less than changing the system is going to get us out of it. And I'm afraid that we are going to be seeing more and more instability as people realize that this network, this cobweb of debt linking us to one another, means that if any part of this system gets in trouble, we're all going to be dragged down with it because we're all hooked into one another through this network of debt. And you can see it happening as the government now, to back up a system in trouble, has to pump trillions and trillions of dollars into the financial sector, because that's where the money initially goes, in order to keep this game going. I'm very, very fearful that the economic downturns, the one we had in 2000, so-called .com, the one we had in 2008, so-called subprime mortgage, and the one we're still in now, the so-called COVID, each of them worse than the one before, are showing us that financialization goes together with an even greater danger of the instability built into our system than we already had.
So I remember back in the 70s or 80s, I think it was, in fact, I think it was in the 80s, when General Motors got into the lending business. They created GMAC, basically a lending branch, figured, hey, the banks are making money, loaning people money to buy cars. Why don't we get in on this? Back then, by the way, you could deduct the interest on your car loans. Reagan did away with that in one of his 18 tax increases on working people. General Electric famously had, a finance division. I think both of those got bailed out heavily by both Bush and Obama during the 2008 crash. I read someplace, this was a year or so ago, that Apple actually made more money in one particular recent year with financial instruments and moving money around and debt and tax avoidance than they did selling products. Now, I can't say that that's for sure true, but they sure made a hell of a lot of money, and this is increasingly happening. These are things that not only were not common practices prior to the neoliberal era, prior to Reaganism by and large, and the changes in the banking laws in the 70s that allowed the credit card companies to explode, but were actually illegal in many regards. Is rather short of bringing down the entire capitalist system, which I think you and I both agree is probably unlikely to happen, at least in this decade. Can we at least re-regulate some of this stuff? By the way, we have about a minute and a half before we're going to hit a hard break.
Sure, we could. Hypothetically, we could limit it, but it doesn't look like we have the political muscle compared to this financialized sector to do that. A couple of comments. You can go back to William Shakespeare and before that. Remember the famous Shakespeare line, neither a borrower nor a lender be.
Sure.
Shakespeare understood that when you get into that on either end, you get hooked by the very process that feeds on itself and makes the situation more and more dangerous. We're living out the wisdom of what William Shakespeare wanted to say. You are right about General Motors. If you go back to those years, you can see, and General Motors knew this, that they were making more profit lending to the people who bought their cars than they were making on the cars. In fact, they lowered the prices of their cars in part to hook people in to buying them at the attractive price and then borrowing from General Motors to pay for it, not understanding that the interest General Motors got made that car more expensive than the original price was. I don't think we can break out of this until we confront the system, because the people who run the finance are pretty close to running the system as well.
Yeah.